Hey, how's everybody doing? Welcome back to mentfx. In this episode, we are going to take a look at some of the trades we caught this week and we sent out on gold. So this week I wanted to make it basically my goal to just look at gold and see how much we could find in it and throughout it to basically be involved in potentially finding some trades, finding some entries, marking it up, and all the other fun stuff. So coming into the week, we had this major drop off into what I believed was going to be a test of this major order block, as you can see right here, right? Expecting for buys from this area. And as you can see, we actually did, I believe I did end up getting into some kind of buy here, and we were actually stopped out by this either STNB or spring, either one. Now, after this occurred, it didn't really matter too much. The point is we understood that we were actually in a longer term reaccumulation or just accumulation, as you can see here. And as we began to take off, as you can see, this week alone, we caught a lot of very, very beautiful trades. Now, again, as part of the last video, if you have not seen the last one, please watch it now. A lot of this can look very confusing. But again, the point of this is not every single one of these schematics will look perfect to you. Not every single one will fit the perfect puzzle piece scenario that you expect. But what you will see is you will see patterns that occur between every single one of these schematics that are very similar. That being the spring taking out lows, right? In the form of this right here. The spring taking out lows, right? Move higher. The test that actually on its own functions as another spring, right? So you have this spring and we have this move away, this formation of this order block down in these areas, right? So just around here and here, as you can see, this actually moved in perfectly to this order block here. But generally you have this whole area that we were looking at, this move away that began, as you can see, a new schematic, right? So we had the selling climax, that automatic rally, secondary test, which did what? Traded lows, right? You see all these lows it created and then had that big drop down. Now, again, you might ask, where's the STNB? Well, this is the interesting thing about schematics. All of them are snowflakes. They are not puzzles. So in reality, if you were marking this up on a 1 minute, you might have seen this as the ST or this is the ST, seen this as a sign of strength or an up thrust, whatever you might want. And this as the STNB, right? There you go. And this as the spring. So again, it could have been different based on what you were looking for. And guess what? As we saw the spring occur, we still were not interested in being a buyer here, even though it was the test of this spring. So again, we're starting to see that fractal nature of Wyckoff. And again, we're not going to get too deep into it because we do a lot of explanation of this in the mentorship. But what's important is that you see how this begins to develop. So as we have this move up and we start to come back down to this test on an even lower time frame, so we were only on a 1 minute, we began to spot what here? Well, we actually began to spot a distribution, right? So notice this, we had a preliminary supply, right? We can actually mark this up together. So here's your preliminary supply, right? We'll do this in caps so you can see it. Here's your buying climax, which makes this high. Here's your automatic rally, right? Making that low. Here's your secondary test, printing that liquidity. Here's your up thrust to those areas, right? Getting just above those areas, just like that. Then here's your up thrust after distribution, right? Which fell down and began the steady climb down. Now, where do we look to enter? Well, look at this final move up, which tested this area, right? So here's your test, and then move down. This made that order block, and look what we have inside of that order block. Well, there's this little inefficiency that lies right here, as you can see. Right? And we were looking to sell about 50% of this order block. And notice this, here's your move here. Here's the move up, right? Here's your move up. And 50% ultimately was this candle here as well as this here. So we were looking to actually sell the imbalance, right? So we were looking at about 50% of the imbalance, but because we don't want to miss it, we actually looked at the open of it. So it was like this, with our stop loss just above these highs, recognizing that if price came all the way back up here, most likely it was going to go higher, since this sell on its own was part of a reaccumulation creek, which should have came to make a new spring or this test of this spring. So again, in just this image that you see right here, we actually have 1, 2, 3, 4, 5 schematics within about 1 day, right? You can see this is from the 13th, this was the 14th. So in reality, from when we first looked at it, from the 14th to the 14th, this alone right here was within about 5 hours. The reason I bring your attention to this and show you the fractal nature of the market from a Wyckoff perspective is because you need to recognize that a lot of people ask about how many currencies they need to look at. It doesn't really matter. right? The thing that matters is how well or in depth you understand price action, because when you understand that, you can look at any currency however much you want, right? The point I was looking at one currency, in this case gold, for the week was because I wanted to show people that you could look at one currency and find trades non-stop back to back if you understand how price is being engineered, how inefficiency is being created, how liquidity is being engineered, and how price is moving through those areas of liquidity to find new areas of inefficiency to then go to a specific direction. So as you can see here, we have this Wyckoff distribution unfold right here, right? And then we have that test that we actually don't still get in on, and then we have that move down, and we look to get in on this, looking to target where? The lows inside of here. Now again, I don't want to target all the way down here because I didn't know how low it was going to come. So the target was actually right here, which what you'll notice was the open of the order block here. So if we go to a 5-minute, right? So again, the market is fractal. We can't get confused by that. So when we go to a lower time frame and we actually look at this trade here, right? You'll notice that this target, actually maybe it's on a 15-minute, it might be a little bit better. So I'm going to try and do this to explain a concept to you a little bit better. We're going to go 10-minute maybe. See if it's playing out on that time frame a little bit better than these. Yeah, so you can actually see this a little bit more perfectly. No, let's go a little bit higher. So maybe a 13-minute. 14-minute. You know what? That'll work for now. So in reality, right, when we look at this, where's the last candle before the up move? So you see all this liquidity in here. Where's this last candle? Right here, right? This move right here. You see that? Now notice where we were targeting, just inside there. Now on a higher time frame, this looks tiny, right? But what you have to realize is, again, it doesn't matter how small the move is when in the end, the only thing that is going to matter is your RR, right? If your RR is too small and spread will get in the way, of course, you don't have to be involved in the trade. But this one alone, right, off that 1-minute distribution, if you wanted to catch it or you were watching it, this was a perfectly fine trade to be involved in, right? So this is why I thought it was best to be involved in it. It gave us the perfect entry and came down literally about, what is this, about 27 pips. So this is a 7-pip stop loss. So again, on gold, since it's such a liquid currency, this tiny move is actually a lot. And in reality, it came all the way down to about 40 pips, right? Which is absolutely perfect. That's a lot of pips to be gained. Now, we came down into the test of the spring and we still were not interested in being buyers, right? But what's interesting is this test on its own acted as another area of a spring, right? So again, you can start to see how every spring that gets tested creates another spring that gets tested that creates another spring that gets tested, and they all look a little bit differently, but the pattern remains the same. Now, this is where we first started to be interested in being involved. Now, in here, again, we can spot the Wyckoffian accumulation, right? You can actually see it quite easily. Notice this. If you want to mark it up, let's move this over to the right real quickly, right? Here's your selling climax, right? So let's just mark this up like we normally would. Here's your automatic rally, right? Or this, either one. But again, doesn't matter because the thing is, the movement is what matters, understanding what price is doing. When ST gets created, what does it create? It creates this pool of liquidity right under this area, right? So let's just, here you go. There's that pool of liquidity. What does it do? It gets taken out by this and this. So actually, what you'll notice is this pool of liquidity also was pretty much on point with the selling climax, which didn't function as an ST and B, right? Or it could have for you, but functioned as an ST, right? So it was actually just another ST. You can have multiple STs. The point of a secondary test is, in reality, from a Wyckoffian perspective, the creation of liquidity. Then you had this move down, aggressive move down that took out the liquidity, right? In the form of an ST and B. And you had that final move down, which was your spring, which also acted as the test of this previous spring here, right? So if we just go ahead and draw a line across, you'll see here's your move down before through liquidity, move away. Here's your test of that and your move away. So that's your order block, whatever you want to call it. Here's your test of it, right? Quite perfectly. And then you get another move away. So you could have been a buyer here. You could have been, or we could have been a buyer here, here, or here, right? But what we did is we were in on this spring's test. Now, what's interesting too is you don't even have to be a participant here. You could have waited for the spring to form, this move away, and then notice where price came to. Where's that last move down before the move up, right? Here's your last move right here. There you are, right? look where price came before it took off, that area. So again, you could have been looking to, and again, this might not look as clean, but if we jump up to most likely a 5-minute chart, we're going to see this a lot cleaner. So let's go to like a 6-minute chart, see what's going on there. Let's find that very quickly. There it is. That's that area, right? 6-minute chart is actually not that clean, but you can see it a little bit, right? Here's your down move, here's your up move, here's your test. Let's get to a 4-minute chart. Maybe that'll help us spot it. So again, this is why timeframes don't matter too much. It's a question about training your eyes to see these areas without having to go up and down a chart. So yeah, you can see it here perfectly, right? Very easy to see. Here's all the liquidity that lies here. Here's your final move down through the lows, your move up. Let's highlight that, right? Wick to wick, draw it across. There you go. Here's your move into that order block and your move away. Also, notice what happens. Here's your order block 2.0 as per the video, your move up, your test of it, your move away, right? Here's another order block 2.0 that doesn't get retested, as you can see, never gets retested here, okay? Unlucky, right? As we start moving up, here's your move down, your move up, leaving some imbalance, right? That's your order block 3.0, 4.0, whatever you want to call it, as they form off of the movement, and you can be involved in these if you want, right? So it comes back down, filling in that inefficiency right there, maybe on a 1 minute, right? Takes off. Boom, boom, order block 2.0 never gets filled, unlucky, right? And we just mark our way up. Now, as we mark our way up, guess what? We could have maybe missed every single move in here. And you just saw that there were 1, 2, 3, 4, 5 opportune times to be a participant in this market. You could have waited this whole time, or you could have not even gotten involved in any of these areas and waited for price to begin to do what? Reaccumulate or distribute again, right? As price made its markup, what do you notice? Well, we began to reaccumulate. And again, within that area, we had the same thing occur on even lower time frames. So this is where we were being participants. This was about Tuesday or Monday, I'm not sure. But what you'll notice is we had the perfect entries again occur, right? We had this mini accumulation take place, right? Giving us that spring, that move away, which created that order block, which we were waiting to get traded back into. Same thing that you just saw a second ago. We had distribution occur up here, which came back down into this spring, which created a new spring or a test, right? And our first entry was based off of that order block that created that, right? Here's your equal lows. Here's your lows, your lows, your lows. Here's your move through those lows, your move away, your test of those lows, and your move higher. Now, as this happened, right, we also had this. We had this move down through the lows before the final move up. And as this move here happened, we looked to be involved in this trade as well. So again, if you waited just a second, this crappier RR trade gave you a better trade here. And of course, we also could have caught this on the way down, but we didn't. Well, we're not going to go over that right now, but you could have caught an easy 1 to 12 here again if you were looking for this as distribution. We didn't catch this, so it would be unfair just to leave it up, but it's for the purpose of teaching in the mentorship. So we're going to talk about that later for the mentorship, not here. So we had that test of this spring as well, and we had that markup, right? And as that all began to happen on a higher time frame, we had this much larger markup, right? And as we made our way into here, we had that spring that acted as what? A test of the spring back here. And what you'll notice is we have that area denoted, right? So here's your move down that took out all this liquidity, right? You see these equal lows right here. Here's your move through those lows. Here's your move away. Never got really retested, only here. Didn't get retested halfway, as you can see, right? There you go. Never got retested, really. And here's your move back into that area and your move higher. Now, if you weren't interested in looking at this area, you might have been looking at this spring right here, which took out that liquidity right here as well. Notice where that price went. Never really got under it, right? So that offered you another opportunity to be a buyer. And why was our stop loss here? Because the real order block was down here, right? That was the low that could have been breached. So as we began marking up, again, you could have missed every single one of these on the way. But as we began marking up, as per the last video where we spoke about the puzzle pieces or snowflakes, you can start seeing every area of a consolidation as one of those snowflakes, as a white coffee in accumulation or distribution, right? Within this area, you can see a bunch. See many areas like this that are highlighted, you can see a bunch. We were looking for buys off of this mini accumulation right here that we didn't actually hit. And as you can see, we were correct about it. Price did make us markup. And if it came to hit this area, we would have banked an easy 1 to 118 RR. Now it didn't, right? But we don't really care about that because again, we were waiting to see more price action. as we began to move our way higher, right, we had that UTAD form, what we believe to be UTAD, we had a new accumulation here form, and we were actually looking to be buyers here. And this is where it'll fail sometimes, right? Not every schematic you mark up, not every single area of inefficiency you find that you mark up will play to your hand perfectly. So this is where our week on gold ended, but all the way throughout just this week alone, this is how many opportunities you had to be involved in this market, right? And what's interesting is as we make our way higher, and this is something we talk about more in mentorship and we're going to cover in the mentorship, you start seeing a larger thing unfold. And again, you'll see the same characteristics unfold here, and you'll see what we're aiming for and how we're looking to process or be involved in the market that is kind of ranging between these, whatever you want to call them, trend lines. Even though we do not trade trend lines, we need to understand what they do, how they form, what the importance of them is. So this was a quick video to show some of you what we caught on gold, how we looked at gold, and how we look to be involved in this market over the weekend. Now, of course, we spoke a lot more about it in the mentorship as to why we were involved in some of these areas. We're going to talk about it in the live webinar. But just from a quick perspective, just from a quick look, you guys can study this and understand why we were why we were interested in being buyers at many of these areas. Now, again, we could have had these buys come all the way to the highs, right? If we really did, right, to the very high, if I want to be one of those gurus, this right here was a 1 to 87. Now, guess what? I didn't catch that. The reality is we took partials near this level about 1 to 5, right? Which, again, from my last video, we told you partials are necessary. We trailed this to the lows, trailed it to the lows, trailed it to this low, actually. So we were unlucky in this case. We got stopped out on this move back down, and then it came higher. So if we just trailed properly to this low, then to this low, then to this low, then to this low, maybe we would have stopped out there. Or if we trailed a little bit slower, this low, waited for the big break, right? Trailed to this low, waited for the big break, trailed to this low, waited for the big break, trailed to this low, right? And then finally got stopped out here. You would have noticed that we could have banked in 1 to 33 relatively easily, right? So how do we catch such high RR? Well, we partial and then we trail properly. And if you trail off a higher time frame structure, you are more likely to lock in higher R. And again, as you can see here, just showing you how we could have trailed this, you could have locked in 1 to 30 relatively easy without any work, right? But again, we trailed to there, we got stopped out there, so that was the 1 to 15 trade, which again is absolutely insane in terms of RR. Now, this trade alone right here, when we got in on, again, why did we look to take partials here and then move higher? Well, because we saw a lot of things occurring here in the form of inefficiencies, and we like to take partials. But after the partials, where did we look to take the rest of our positions off? Right above these highs. Notice how these highs formed, right? And we had that move up. That's where we looked to take them out. And we were actually trailed just under these lows, I believe, and we were stopped out here. But again, if we trailed slowly, as per the lows, we could have made and caught this position up to potentially maybe this high, maybe this low, and then this low, maybe up to 1 to 23. Again, there are tons of opportunities, and there's a ton of RR that can be caught by you in this market if you train your eyes and employ the correct trading techniques and understand institutional order flow, just like we've gone over in every single video thus far on this YouTube channel, even this one alone, right? All these opportunities gave you tons of chances to get in. Now, of course, we didn't catch the entire moves. We never pride ourselves on catching the whole move, because at that point, a part of it is almost like gambling, right? We catch the move, we get involved in a move that we understand, we partial at areas that we understand, we trail as per our own understanding, whether it's a more riskier trail or a more laid back trail for the purpose of potentially locking in much higher RR, and we're happy with it because there is no emotional tie to the trading, to the trade after we've done all these steps, and we employ them over and over again as we do in the mentorship, as we send them out and all that stuff. So I hope this video made a lot of sense as to why we got involved in some of these gold setups, how one currency or even two is more than enough for you to look at, and how you should be studying the market and reading into price action. This is a 1 minute, 3 minute chart, right? And if I can do this on a 1 minute, 3 minute chart and find it back to back for 4 days straight, why can't you do it on something else, right? And that's exactly what we did on Euro NZD as we went over in the last video, where we were looking at all these setups that we potentially had literally in the last 3 days. So this right here is price action in 3 days. It doesn't look like it because of how it is marked and how important and how much importance we gave to every level, understanding the reason for its creation. But if we zoom out to even a 1 hour chart, something a lot of you maybe look at, you'll notice how small the area that we just traded in for the week really is, right? So from this, I just want you guys to take that wait. You can be patient. There are going to be tons of setups. So thank you for watching, everyone. I hope you enjoyed. Leave a like if you did. Leave a dislike if you didn't, but let me know why. And I'll see you guys in the next one.